Here's the falling wedge pattern that I talked about on last Friday, and also I mentioned briefly that there's potential trading opportunities right after this breakout, and I did initiate a long entry during the London session. And in the later part of the video, during the trade review section, I'm going to share with you how to actually use the volume spread analysis to use it as a timing tool to time the market. And subsequently, you can also notice that right after this Friday session, this morning we have another attempt to rally up, but the failure happened right there. So I'm going to talk about the failure case in the later part of the video during the market outlook section as well. Alright, so let's just get started. So first of all, let me get down to the daily time frame, and let's just start from the daily. So this is the daily chart of the S&P 500 E-mini futures. So one thing that stands out here is definitely the very low volume session. So you can see that the past two sessions here, we have seen relatively small price spread and also a very low volume if you compare it to the past few trading weeks or days. And nothing unusual or threatening for the last Friday session, but I would like to share with you this hourly time frame, and you can take a look at the falling wedge pattern started right there. And also just prior to this Friday session, we have this Globex period. So the breakout actually happened during the Globex period. I think it's during this London session, and subsequently right after the breakout we have a brief test, a pullback, and also a continuation to the upside, but it just didn't really go too far because it just failed to come in above the immediate resistance level at 36.40. So even during the US session at about 10:30 p.m. at my time zone, we can see that it just struggled to come in above this 36.40 level and eventually have a very brief reaction. But the last hour action is very encouraging. We have a demand tail and close near the high. So overall, the session is relatively quiet, but I also talk about the possible failure case if we can't overcome the 36.40 level, which it just happened this morning right here. Okay, but anyway, let me just get down to the 3 minutes time frame, and let's talk about the trade and how I actually use the volume spread analysis as a timing tool to time the market. So volume spread analysis is very powerful if you use it correctly and with the right context. So trading is all about the context. So without the right context, I think it will be very misleading. So let me just give you a bit of the context right here just before the trade happened. So the trade happened roughly around 4:30 p.m. at my time zone. But before that, you can see that this is a sign of strength rally. So right after that, we have seen this pullback. So if you have been following me for some time, you probably noticed that I don't really trade the initial breakout. So I always want to wait for a test. So right after the breakout, I always want to see a test. So this pullback is actually the test I'm after. Because if we just jump in at this breakout point right there, then I think a lot of the time that we can experience the false type of the breakout, and eventually you probably will notice it just break out temporarily and eventually just fail and just go back to test the low right there. So what I would like to see is a confirmation or a test first. So this is the test as a pullback. So you can see that this is the shallow type of a pullback that I'm looking for. So unlike the previous type of a reaction, like this big reaction down, or even let me zoom out a little bit here. So you can see that this is definitely something different. So we have this kind of the great rally up and followed by a very shallow type of a pullback. So unlike this type of pullback or this type of pullback here. So that actually confirmed the structural strength, and subsequently I just want to lean on this falling wedge structure, because at this point this structure, the falling wedge structure pattern, is still valid. And here is the sign of strength rally, and this is the pullback. And the reason that I just enter a long entry right after this bullish bar is because of comparing these two bars alone. So let me zoom in a bit more so that you can see the actual volume as well. So overall, my bias is going up because the falling wedge pattern just get broken out, and subsequently we have seen this shallow type of a pullback. So this is the structural strength that I'm looking for, and now all I want is to determine the timing. Otherwise, without the correct timing, this type of pullback can just last for a while and we don't really know when. So this is where volume spread analysis comes in handy, because without the determine the actual supply and demand, who is dominating, then we don't really know the right timing. So here we go. So this is the pullback as a test of this sign of strength rally, and subsequently I just compared this two bar alone. So let me show you this two bar here. So if you just pay attention to this big bearish bar and together with this small spread bar, and take a look at the volume. So they have a very similar volume, but look at the spread here. One is a very big spread and the next candle is relatively small spread. So what does it actually mean? So it simply means that with a similar effort, the effort that I refer to is actually the volume. So with a similar effort to push a price down, and what we get is actually a very small spread bar. So without further commitment to the upside, the downside, or actually to break below the previous swing low level right there. So you can see there are quite a few things. So first of all, in terms of the spread, we have seen a very small candle, so unlike this big spread candle. So in terms of the intent, it didn't really go below and create a lower low, so it just formed a higher low right there. So that actually suggested there's quite a lot of the volume there belongs to the demand, and unlike the previous candle right there, is a lot of the supply which actually pushed the price down. So what's stopping the price from falling down further is demand. So there's some demand come in at this candle and at this volume bar. So right there, I know that there's demand come in, and also it actually formed a higher low without penetrating this immediate localized support. So right after that, I just wait for this kind of the bullish bar acted as a confirmation bar or a reversal bar to enter long. So you can see that my trade actually happened right there, and subsequently I just kind of trail my stop and eventually got stop out somewhere around there. So I just trail it. I think it's just below this swing low right there. So eventually got stop out at this point. So somewhere around 5:30 p.m. at my time zone. So definitely it's relatively short duration of the trade, and you can notice that this kind of the volume spread analysis is a very powerful tool to use it as the timing to time the market. So because at this point we know that there is a emergence of the demand, so what we can expect is actually the demand come in to push the price up, and this is where the rally started. So started on these three candles, followed by a short pullback and also a continuation to the upside. But you can see that the volume spike right there, and that is also where the supply come in, and they actually stop the up move and into this kind of the trading range with no upside follow through. Okay, so overall this is a profitable trade and got stopped out with probably let me just see, around reward to risk ratio of 1.4, so not too bad. And eventually you can see that there is a slight push up just before the US session started at 36.40, but wasn't able to come in above. So 36.40 acted as a resistance right there, and eventually it just struggled to have a follow through to the upside and have this kind of the breakdown. And one thing that is very encouraging, I think, is the last hour bar. We have a quick recovery and close at the middle right there. Okay, so here is the trade review, and let me just get back to the hourly time frame and let's talk about the falling wedge pattern failure scenario. So last Friday I do talk about potential continuation to the upside if we can overcome the immediate resistance level at 36.40, but unfortunately the failure actually happened this morning. So we have seen a gap up followed by a rejection and also continuation to the downside, break back below the immediate resistance level at 36.40, and here comes the reaction. So that actually just break below this immediate swing low level, but you can see that pretty much we are still within the test of this breakout bar right there. So overall, despite that the falling wedge pattern no longer valid, in fact it's just kind of still in this trading range mode or the consolidation mode, but overall we did not really break below 3600 level, which is a strong support level, or even we can extend it right there at about 3590, so that will become a good support level. So definitely currently we have seen this kind of the V rebound, and let's see if we can just go up and test the immediate resistance level at 36.40 again. Okay, so for the trading plan for the session later, what I'm actually looking for is actually the immediate resistance level is still the 36.40 and followed by somewhere around 36.50 or 60. So I think this level will belongs to 36.50. So eventually if we can just go back and have a test, maybe I think right now this is a very obvious level, but if you can just go back down and have another reversal signal, then I think we can probably rely on the level right there at about 3600 level. So wait for a test and a reversal, so that could become another long entry. Otherwise let's just focus on the resistance level at 36.40. If it shows a rejection again, then it probably need more time to spend within the trading range, and then we can look for opportunity to short it, and probably will just still stick within this trading range for some time. Otherwise, if it's turn bullish, then definitely there is a high chance for the continuation to go up and also test the previous swing high or all-time high level. So let's just see how you actually react at this level, 36.40. So I did initiate a trade right after this oversold level, somewhere around 36.10. So let's just see what happened next, and I will just provide the review tomorrow as well. This is the end of the video. Hope you enjoyed it and get something useful out from the video. So if you'd like to learn more on how to increase your winning rate, definitely check out the video that show up on the screen right now, and also subscribe to my YouTube channel and do join my email list for free so that you get my weekly stock watch list update. Alright, thanks for watching. I will talk to you soon.